What's happening, guys? We have another Sunday video coming at you, this time for the 20th of February in the week ahead. It is President's Day, so we had the day off, and that means we have a 4-day week ahead. I've got Chris on once again. Thank you, Chris, for being with us.
Of course.
Look, the elephant in the room is obviously going to be SMCI. I'm not going to go crazy into detail because I did that on Friday. I put out all the chat logs. I put out the calls and sort of anticipating. But I want to remind people that just like on HOLO, you either nailed it, you either missed it, or, you could have performed a heck of a lot better. And I think that most people can relate to that. And I wouldn't be going Tuesday, Wednesday, Thursday, trying to find that next SMCI or that next HOLO to try to make up for it. But what I think the benefit is going back, reverse engineering, and sort of asking the questions, what could you have done better? How could you have executed better? Or if you were trading it in the days leading up to it, what were some of the signs that maybe you can improve on for next time? And if you recall, over the last 2 weeks, when Chris and I have been kind of going back and forth, he took more of the fundamental approach, like, hey, this move does make sense. Don't jump in front of something just because it doubled when their revenues are doing the same thing. And I took it from, the technical kind of standpoint and going back to something that we maybe learned 5, 6, 7 years ago, which obviously Chris was in the same boat with that, comparing it to the Tesla move, right? So, you could probably chalk this up to, a opportunity as big as Tesla back in the day, Mara, maybe most recently, about 3 or 4 weeks ago, not the ETF trade, but the prior one to that, GME. And, so it's really just maybe 5 or 10 opportunities like this that maybe I've seen over my trading career. And you always want to kind of get ready for the next time that you see it. So, what can you take away? And for me, like what I did and what I studied was, what could I have done better options wise? How could I have taken maybe more risk on this particular day? And granted, look, it worked out perfect. All the stars aligned and everything did exactly as anticipated. It's not always going to do that. And the reality is on those options, you can always go back and say, I could have turned $1 into, 10 million or whatever game you want to play. But think about why there was that opportunity. These are zero dated options. These are things that if that move didn't happen, they were going to be worthless anyway. So that's why these percentage moves were there. And, granted, like I said, all the stars aligned, everything came together. And, just the range anticipation and kind of the prep work going into it, it just, all just happened at the same time. And I think the biggest thing to, that I felt important to kind of go over is, all week, the last, 2 weeks, we've been talking about ideally 1,000 to 1,200. And so even that Friday, I'm thinking, okay, now here we are, it's Friday, we're gapping up. And so I'm starting to think 1,100. And then it starts to kind of push, and you need to be okay to adjust on the fly. It's never going to be perfect. And what I noticed over Thursday night, everybody's waiting for the same thing, right? So I know that everybody is hands off because everybody wants 1,100 to 1,200. So if it pushes and it fails and it pushes and it fails and it pushes and it fails, and it's not getting up to that 1,100, I know everybody's still hands off. It's not going to be as crowded as you think. And then once they realize, like, oh, I should have been there, it's too late and the bottom drops out. So, that was the initial reaction that I had off the open. A lot of people asked me what I was risking towards. If you read the chat logs, my thought process was 1120s. So I wanted a push. The channel was 1060s to 1080s. I wanted to see some sort of push. I wanted to see failed follow through momentum, 1050 confirm, and then so on and so forth. And, clearly the bottom came apart. So really good opportunity, great case study, like a real case study because, look, I know a lot of people fumbled it, but the next one that comes can change the trajectory of your career. It can change your life. It can change, you going from a steady kind of grinder to this new, level of trading. Everybody has that one moment in their career that takes them up to the next leg, that next style of trade. And that for me happened in 2020. And, then you kind of just staircase up to whatever level you're comfortable with. But these are the ones that allow you to skip a couple levels. So that's kind of like the quick review of it. Obviously, you guys can go back and read the chat logs and tweets, and you can see my trade that I took. And I know Chris has some thoughts for the week ahead, and also sort of just being aware that NVIDIA has earnings on Wednesday. So he had some color along the lines of there, as well as something that maybe kind of lights the fuse for the weeks and the months ahead.
Yeah. So just touching on SMCI real quick, it's no coincidence that this big flush happened on a Friday on MOPX, and like basically that's like monthly options expiration and everything. So like we talk about when you have these either, partly gamma squeezes, and what is that? A gamma squeeze is simply when the options chain is responsible for a large part of the move. And so if you have the options chain responsible for a large part of that move leading up, calls after calls after calls all the way up the chain, and then you get to something like Friday where you have this huge amount of calls all expiring on that one day, then that can be really, really impactful on the way down too. And so if you had people buying, 1,100 calls, 1,150 calls like they were that morning, and then all of a sudden the stock stalls, all those hedges that the people who are selling the calls, the stock that they were buying to hedge out the calls that they sold, they don't need those hedges if the stock starts going the opposite way. And because you have the decay effect on Friday, those options become less, so they have to hedge less. And so you can have a gamma squeeze on the way up, and then when the music stops, it can flush really hard. And so it's definitely not a coincidence that this happened on a Friday. And that's something that if someone was trying to wait, days for this to kind of set up, that's definitely something to take into consideration, that when you have these big options expiration days, those can be great times to really, try to catch the fade instead of the days leading up to it when that's still a driving factor. But going to NVIDIA. So NVIDIA is going to be kind of the big theme this week. And if we could pull up the NVIDIA chart. Yeah, so on the 21st, which is Wednesday, NVIDIA has earnings. And so markets are forward looking. And so you had giant moves in SMCI and in NVIDIA leading up to this moment. And basically what the earnings report is all the hype actually going to be validated? And that's kind of the day where you see, oh, well, NVIDIA actually doesn't, they're not continuing to grow at 200%, or they are. And we don't really know until that day comes out. And so think of that as like the thesis validation day. And if the thesis is exceeded and they're like NVIDIA continues to outperform and even exceed, the high expectations that the market has, we're going to have that next leg up most likely. But if they start to say, oh, we're leveling out a little bit, or if we, fall short, then you're going to have that big, snap down and consolidation possibly for a couple of months. And so the point is, we don't really know what that validation day is going to look like, but what we can do is be prepared for either scenario. And so, something that I'm going to be paying attention to is that if SMCI, and I'll pull that up real quick, if SMCI continues to flush down, maybe, touch that 750 mark or so by Tuesday or early Wednesday, and, you have a lot of option activity, and then all of a sudden it stalls and it's not going down anymore, but everyone's still bearish on it and the positioning's still bearish, you could have a lot of that positioning come off before the NVIDIA earnings, because people don't know what that's going to be, and you don't want it to swipe up 200 points on you if you're, bearish and you're wrong. And so I think that you could have potentially a really good bounce trade coming on SMCI, but again, it's not something to force. And I'm going to be looking at not just key levels, but also the action around that. So I want it to be, dip and rips. Like that's the sign that you have some bearish positioning, kind of offsides and the stock's going the other way. So that'll definitely be something that I'm keeping an eye on. But just in general, keep a few things in mind for the NVIDIA earnings, and that is that it's a validation day, or it will invalidate kind of the running thesis, and then just have some plans in place of which names you want to go to for a bullish scenario or a bearish scenario. So for bullish scenario, it could be like SOXL, which is like the levered bullish semiconductor, or you could have something like that AI stock, which is like a squeeze name, a trash name. And if you have NVIDIA disappoint, you could have the whole sector flush, and you could have something like this in particular get hit really hard.
Now, on you were talking about SMCI and the fact, obviously, options on Friday. And if you actually go back, and the other example that I had given was Mara. And, obviously we had this big day too. This was actually a Thursday, but the initial day, the day that we were probably watching all this action, but we had that huge crack before the end of the year, that was also a Friday. So you are way more well-versed in options than I am. But just to kind of understand, in the situation here, it's my understanding, I don't know if it's 10 or 20%. I think it's usually about 20% or so that the market makers kind of sell essentially naked. They usually are, they usually hold 20% of what they've sold. So when you have a situation where it starts to gap up and they're sort of forced to go into the market and hedge, like you were saying, at the moment that it no longer is going up, all of that stock that they just took off the market to hedge, they no longer need. So that's why you get those ridiculous moves. Right? They're forced to buy at prices they don't want to, just so they don't blow up. But as soon as things start to, come back into check, they're trying to dump it as soon as possible so they don't, absolutely get smoked. Is that correct?
Yeah, that's kind of the general idea. And I was in the trading lounge with a couple of people like Dawson, talking about this a few days ago. And I said that like a key phrase to really keep in mind that will help you to visualize this is that if you have a market maker hedging a move up or hedging a move down, and suddenly they don't need those anymore, just think about the phrase, and what am I supposed to do with all these hedges? And it's basically, if you're hedged for, an upside blow off move, and you're, hedged to the gills with that, and it doesn't happen, well, what am I supposed to do with these hedges? And you dump them. And you basically have the market maker or whoever's selling the options going from being a demand layer. And so we talked about like these layers of demand and these layers of supply. And if you have these market makers that were a giant, level of demand, suddenly if they don't need those hedges anymore, now they're a big, level of supply. And so they go from being on the bid to being on the ask. And that's how you get this, steady pressure. And so it's a really good thing to study and to incorporate into, your setup and your plan for the next one of these moves is that, the Friday expiration, or it can be Thursday night. It's basically, if you have a weekly option, it holds its value relatively well, and it starts to decay really fast, later on Thursday. And then on Friday, it decays a lot. And so it's just something to be aware of. And it can work on the downside too. So let's say that SMCI, sells off all week and they're piling in on puts on it and everything. And then you get to Friday and the stock stalls and you have people, super hedged for puts, and they hedge puts by shorting stock. And now, what am I supposed to do with all these hedges? And they'll cover if they don't need them anymore. So that's a good key phrase to keep in mind.
Awesome. Yeah. And I think, of course, it's not always going to happen on every single Friday, but it's just one more of those stars coming into alignment when you have a super, super overextended chart. It's Thursday coming into Friday. You have a major gap. These are all sort of the check boxes that you want to see in order to say, hey, this is the day that I need to be here. This is the day that I need to focus. And this is the day that this is what I'm here to do. I'm here to risk on this particular day. If you lose, it was worth the risk. But these are the types of days that you want to prepare for the next. And, I don't see value in trying to catch the next HOLO, right? They're very hard to catch. They're very, very risky. Sometimes it could be negative 80% on the same day. And yes, we all look at it and it's like, yeah, it would be cool to have that 1,000, 2,000% runner. But these types of trades are not as risky in the sense of, you have an infinite loss ability on the holo with the circuit halts and the high likelihood of the 80% drops. This is a much better, higher probability type of setup with actual liquidity that I think that can easily change the trajectory of people's careers. So, good stuff to go over. And again, Tesla, Mara, GME, you might be able to name a few off the top of your head too, but those are the ones that come, front of mind on this situation. And as always, I know I can get better equity wise, crushed it, had a great trade. But option wise, I'm giving myself an F, so there was definitely the 40x, 100x type opportunities. But like Chris said too, remember, these are zero dated options. So, you could have that 50 flush off the open and then it comes right back to flat. And you just went from a 2 to a 50 back to 2 or 3. So, again, I wouldn't hyper focus on trying to get the next 40 or 100x, but figure something out in between there. And again, it could really change your path. So like Chris said, NVIDIA, be aware of that. I agree. If it flushes to 750 off the open, I think we might have a nice, a little rebound, 820, 850, something like that. But you're probably going to see it start to kind of consolidate and head sideways, maybe leading into Wednesday, and then just trying to get a little bit more color come Wednesday, or I guess Thursday morning once the earnings have been out. So a couple other things for the week ahead, some tools. One of the things that I constantly go over, especially on broadcast, they're not always trades for me, but those that are beginning and trying to build accounts, sometimes the liquidity is a lot less than I personally like. But you've got situations like DBGI, and DBGI also had this huge move, with everything else that was moving. But most people are only interested. Let me just put this on so you can see it. Most people are only interested this day, and then they take it off radar. But there's a lot of mileage left right there. And we talked about that on HKIT the days after Polo. We talked about it on MLGO the days after. There was definitely opportunity there. And then we had CHNR the day after everybody cared about it this week, where it had a nice little dollar fade. Now, is that something that I can take that's, high probability? Absolutely. Am I going to go aggressively with size? Absolutely not. But the point here is that if you're in account building mode, these are things that, you don't need a lot of size. And most people are going to ignore it due to the liquidity. But these are great high probability setups. Keep what happened on Friday on watch on, in this case, Tuesday. But always keep whatever's going on, because what happens when we're in a market like this, where you wake up with 2, 5, 1,000% type gappers, where's everybody's eyes? They're all on the 2, 3, 500, 1,000% winners, not on yesterday's action. And that means they're not going to be crowded. And there's edge there. There's edge for you to spread across all these different names. And you'd be surprised at how much it does add up on small size. Couple other things, liquidity traps this week. We had CPOP. You can see this little cleanup move over here. So they kind of ramped it up to 2, then consolidated, killed the volume off. And then obviously we had potential cover from those prior days, as well as another trap in the morning. And we had, once again, and I know Chris was on this one on the long side, whether or not he made it to 95, that's another story. But regardless, you've got that same sort of compounding liquidity trap, where you've got this initial move, you've got this next, secondary move, and then everybody's like, all right, that's it, it's over. Nope, held, and now they've got to squeeze out as they break through that, basically a technical breakout around the 40, 41 or 42 level. So I know you traded it last week, and I know you had a couple comments on that, so feel free to chime in here.
Sure. And yeah, I actually gapped Holo from I forget which night, maybe Thursday night to Friday or something, and I had an entry of 32, and I ended up selling at 34. And I honestly, you look at these crazy moves, because I was anticipating kind of a compounding liquidity trap, but just when I woke up that morning, I was like, I probably really shouldn't be gapping these things. It's just like remembering the DNA of what these companies are, and just someone's on the red button of just basically trying to screw shareholders whenever they can. And so even though the setup did work out and everything, I just didn't feel great about it, holding it. So I ended up buying at 32. I sold at 34. So, small, nice trade, but I ended up going crazy. But it's okay. I didn't feel regret or FOMO because, again, it's more of this process of just, is this the right trade for me and what I'm trying to do? And just because something worked out or didn't work out, that's kind of like the particular example. But just as a general concept, I wasn't happy that I took that overnight. And so I did the right thing for myself. I got out and then I watched it go crazy, which was, of course, frustrating, but that's what it is. It's no big deal.
Exactly. And you know what? Most of the time, if you do what you did, you'd be on the right side. It's very rare that these actually, compound in this manner. And most of the time, you'd probably be looking at, 18 or 20 bucks right after your sell. So definitely the right move regardless. Last but not least, before we get into the ideas for the week ahead, I wanted to just go over a couple of these clear out moves and, sort of, what I'm looking for in action and opportunities. So, this SIEN, one of the big moves we had, a lot of times we'll see a basically go straight up and then start to fade. And everybody's like, all right, it's, kind of over. But that walk down is actually the trap. And then they kind of come back. And what I start to focus on is where are they absorbing it? And you can kind of see this is what I consider a sub VWAP trap. Ramps up, comes back, and it reconfirms right over here above that VWAP level. And then again, we had a nice exhaustion move. It blows off, sits back. And that's when I put a line on my chart. And this particular situation, I said, hands off short side until 55 confirms. And this is sort of a cheat sheet where if you take some sort of reactive trade, so this was actually a nice little stuff move, slam right back down, flush the next candle. But whenever you take a reactive trade, meaning you're reacting to the action, you have to also have front side covers, proactive covers. You have to be ready for it. Otherwise, if you're not good at that, you wait for that line to agree. So whenever I start into a reactive trade, if it stuffs and it immediately gets soaked, I put a line there. And I also typically mention it in the room. Hey, 55 is your key level. Be aware. Don't fight it above that. And what you'll see is you can see that it kind of did it again, and then it started to dip into the 58 level before it started to head a little bit higher. So you're essentially looking for that in reverse. And so you start to see that it's butting up against the 99, 99, 99. Well, it cleared out, sits back, right? So it's essentially the opposite. Now it's on radar. And usually I'd even rather see it, you can be in hindsight and say one was a good entry, 95, etc. But I like to see it actually crack under the channel that it was hanging out at before I start to get involved. And obviously that ended up being a really, really nice opportunity. But same thing with HTOO. A lot of these you'll see the sub VWAP trap. Be aware of this. Sometimes you've got something like CPOP, which it just goes straight up, and VWAP's actually a lot lower. And other times you've got HTOO where it kind of ramps up, they collect shorts, and then they go for that round two. So for me, it's all about identifying where that congestion is. 420s, there was a ton of congestion. So the thought process that I wrote in the room is the more it trades over the 420, the better. And the reason for that is because it's exhausting shorts that are scared, and it's starting to get breakout buyers on the long side, on the wrong side, if it comes back under that 420. Once we exhaust out, once there's volume and it confirms in that 420 line, next level, 385, and then 360 is the point of no return, which I typically call sort of the sentiment shift. So for those that are not good traders on the front side of the moves, I always wait for it to exhaust out at this 385 level. That way you can at least use 420s as a risk. A lot of times people are always like, well, what's your risk at? If you need risk, you should avoid the front side, wait for it to fail to follow through, and then you use those levels as your risk. So there's that one. And then CPOP, same deal. And you can see, look for those points of congestion. It'll help you. And, once again, we're in a market where you need to lock in. If you're scaling into a trade, this looks bearish, and all of a sudden you're back to the highs, right? But you don't want to ever be in a position where you're forced to exit. You should be exiting because it's the right thing to do. It's part of your plan. You want to avoid situations where you're oversized and you're forced to exit. Obviously, that's why you have risk. That's why you have stops. But especially in a market where we're getting, crazy volatility, make sure you pay yourself along the way, and don't worry about what you could make or what you should have made, because more often than not, it's going to chop you out, and it's pretty crazy right now. So I think that's about it for the prep. I don't know if you had anything else to add to those either liquidity traps or the clear out moves this week, but if not, you can get right into your watches for the week ahead.
Yeah, I think you covered everything. So I'll just get right into the watch, and that is starting with Adobe. So neither Nate nor I are financial advisors, and this is not buy or sell recommendations. This is for informational and educational purposes only. So a couple of things that I'm watching this week. It starts with Adobe. So I have the 1 year chart on, and this is just to show like a big picture or like a long-term possible trend change. So when you have a theme like AI, we have NVIDIA as like the main runner of that, and it's driving the whole sector. But then you start, as the theme starts to get more and more popular, more saturated, you'll start to have these secondary themes pop up. And so with AI, you're really starting to see more interest in like the imagery and the video content that AI can actually bring. And so for a while, Adobe was kind of like the go-to name for that. But then you just had the company OpenAI, who they're the parent company behind ChatGPT. They started releasing their own kind of imagery and video content for AI, and it looks phenomenal. And so I think once that started to come out last week, you had a lot of people who were in Adobe starting to think they're not the only player in this anymore. And so I think that there's a bit of a revaluation going on. So that's all to say, there's a possible trend change with this sub-theme of AI going on right now. And I think that if you have, NVIDIA earnings that can also impact the AI sector, if you have that along with the sub-theme already kind of trending down, this could be a really good name for my style, potentially puts for a week or 2 weeks out, as long as it's trending with relative weakness, especially if you get a big pull down in the AI sector, which again, we don't know if that's going to happen, but this is definitely a name on watch for relative weakness. And if the market's weak, if the AI sector is weak, and if this is weak, then this is like a go-to kind of name that I would look for puts. And so the next name that I'm looking at, still related to the AI sector, is kind of on the opposite side, and that's SMCI. And obviously we had the giant move on Friday. And so what I'm kind of looking for is, again, this is just a reset of positioning. This is not necessarily a whole trend change, but this was, you had such a smooth line up for so long. And what happens is that you have, if no one ever gets shaken out, you have so many weak hands that start to get into the stock, and the first flush, they all exit at the same time while you have the gamma stuff going on, while you have shorts piling into it. So you have this, big, nice flush on it. But if the trend that was still there, for the last, several months is still in place, and NVIDIA validates that, I think you could have a potentially really good bounce trade on this. So let's see if it gets a little bit more weak and we touch maybe that 750 level or so, and it starts to, basically have a hard time going down, starts to get some dip and rip candles. And, you have some people really pushing the envelope to the downside, trying to recreate Friday. And that could create kind of a positioning flip where it went from, too bullish and a giant flush to now maybe a little prematurely too bearish. And we could get a swipe back up, especially with NVIDIA earnings. So that's something that I'm watching. But again, this is a thesis laid out, and I want the action to agree with it. And, if it starts acting really heavy and, there's pops that get sold off, then it invalidates my thesis, and I would have no problem switching bias. But I am looking for a potential bounce trade in this, but I want to be proven right by the action in the stock. And then moving away from the AI theme, I'm keeping an eye on NNOX this week. You had the press release come out that NVIDIA had a stake in it, and obviously when you have like a $300,000 stake from a company like that, it was a leftover from, like some byproduct acquisition thing or some like old options that they exercised. And so it's not actually NVIDIA being bullish on this stock. It's much more about just a headline came out that associated it with, one of the hot themes. So it was kind of one of those obvious things that's like, okay, it ramps up and it's going to fade. But when it becomes a little bit too obvious and you have a lot of people trying to short it and knowing that it's going to go back to where it came from eventually, you can get that positioning offside. So we could have a nice ramp up in this, possibly into that, let's see, $20 level or somewhere around there. And so what I'd be looking for is, a big exhaustion move, kind of that capitulation from the bears. And then once you have that big volume day and it starts to, pull down, stay heavy, fail to follow through, then that could be a good name to watch for a potential fade. And so that's pretty much it for the individual names. And then just as a reminder, I'm always watching things like Mara and the crypto sector because AI has gotten all of the attention really for the last 2 months, and you've had a big run up in crypto, and it's kind of a silent bull run. And those are the ones that tend to last longer, where you don't have everyone like tripping over themselves to get in. It's more like you have these pockets of rising and consolidation, pockets of rising consolidation. So I think that Bitcoin is going to continue to be a good mover, and the stocks will go with it, with the reminder that the Bitcoin halving is happening in April, and that's when all the miners get their revenue cut in half. So, keep an eye on a trend for upwards, kind of leading up to that. But then as you get closer to that event, when you do have that big sell-off, you could have a sell-off that is sharp and that is heavy, and it could be another spectacular opportunity, kind of like SMCI. So you could have Mara or something go to 35, 40, 45. And then on that Friday, when it's no longer going up and you have all those calls, then the market maker, whoever's selling it, says, what am I supposed to do with these hedges? And you could have a big slam down. So that's definitely something to keep an eye on for the weeks and months ahead.
Perfect. All right. Let me see. I'm going to put it on this way. Change it up. So, I think, and as Chris is talking, those are things that I like to hear and think about, right? So for April on Mara, CLSK, that's a catalyst. That's another big trade potential like we had when the ETFs were approved and Bitcoin went to 50K and flushed down to 38 before, obviously recovering. So that's something that you want to kind of keep in mind. And like you said, it just depends if they're offsides or not. If they're hedged for this event, then it might not be as aggressive. But if everybody is like, all right, it's going to get halved, and they're shorting into that, and it doesn't happen on their timetable, or it's obvious, like NNOX was, then it might hang around for a few more days. So I don't want to exhaust myself by saying, well, this doesn't make sense, it should fade. Have a plan, let it prove your thesis out, but be aware in April that there should be a really big opportunity. And also things like what Chris was saying on NNOX, very similar to me, it could be, same thing could happen on SOUN. And I feel like the same thing happened on Plug. And I know that they needed money and the PRs were out here, but everybody kind of came to the same conclusion at the same time, and it's just all BS, and it doesn't make sense, and they need to hit their ATM, and they need to do this and that. And it ended up staying around for a few more days than most people expected. They end up getting squeezed out, and then, great opportunities after that. So, that, in my opinion, you're going to need to apply towards NNOX. Yes, we know. There's no reason for it to be up here. And everybody knows that. Everybody knew that on Thursday. That's why it faded off the way that it did. But guess what? Too many people got caught offsides, and here we are back to the highs. So let it do its thing. It's got to work out that, the crowd, and then your opportunity comes. That could be 2, 3, or 5 days from now. But the key is not to exhaust yourself out in the near term, and then be there for when the trade actually is set up. And last but not least, based on what Chris was saying with SMCI, 100% agree. I think that the other thing too is you have to think about how many people missed this move on the long side, right? If you think about mom and pops, they don't necessarily care about price, but at some point they're like, oh man, I missed it. And so now it's coming back, and now they're all looking, and they probably got their bids in and ready to buy. And, that is the general consensus on these things. People are just waiting for that one big pullback to then position into the trade. So there is going to be a lot of demand for this thing. And one thing to just be aware of is sometimes you see, it does everything you expect and it's just too easy. If it's too easy, to me, that's usually take profits and run, because everybody's going to be there and it's going to slowly fade all the way back down. You're going to be wondering why you just let 20, 30 bucks kind of fade away when you had the trade within the first 5 to 10 minutes anyway. So just be aware of that. But for me, I've got an NOx on watch, very similar to Chris. Also very clean failed follow through setup over here. You can kind of see this exhaustion move and then a lower high right over here. So this to me versus that 14 was super, super clean. I did not take the trade, but it is definitely a super clean setup. For me, I'd be always, kind of looking for where did it base and, where above that did it have, a little bit of trouble. So in an ideal world, I'd like to see some sort of push 1270s to 13s, 1310s, whatever. But sort of in this range, I'd like to see a push, exhaustion, and then start to fade off from there. If it were to build over this 1310, 13 level, then I probably want to be hands off. Keep on pushing that wrong button. Then we've got LYFT, which was fantastic. This was another one where perfectly clean failed follow through setup. Same deal here. This is the one that I had posted in the room, and you can kind of see here how 1930s essentially, but for me it was 1920s is where I positioned into the trade, and then we had that nice flush. So that was a short-term kind of trade, but much like I said earlier on some of these other trades, don't forget it the next day. I forgot it the next day because obviously SMCI was going. Most people probably focused on SMCI over this one, but if you don't forget, very, very, very clean trade. So I'd be watching, and again, same sort of thought process, look at where it kind of was hanging around. So I'd like to see it at least push up towards this 1840 mark and then start to fade off from there. SMCI, same exact thing as we've gone over, same thing that Chris said, so I won't dig into that again. And then the normal watches, CLSK for me and Mara are always on radar, but just don't force it. If Bitcoin's going, slowly up or sideways, you don't have a trade there. The only times that I like to react to that is some sort of big move off the open where Bitcoin's not doing much, or if Bitcoin agrees. So that's what I'm focused on the week ahead, mostly bigger caps. Like I've said all week, and like I've said all year, last year, small caps for me is a very small part of what I do. I'm trading them way smaller. I don't want any headaches, and I want to really, really focus on the big names, the big opportunities. The SMCIs, obviously we're not going to have, that happen multiple times per month, but you're going to have 50 to 80% of those opportunities, every couple months. I want to show up for those big ones. I want to show up after the 1,000% runners. And otherwise, I want to be really focused on these mid to large caps with small cap kind of tendencies. So meaning they're starting to trade like small caps. So I think that's about it. And of course, I wasn't prepared today, so I didn't have winners on the T-shirts, but I will put them on scan. And as always, if you look at the description in the bottom, we have a link to the blog post for this scan. And I always put a couple other watches. I have more, failed follow through watches, stuff like GXAI and moves like that, which this is actually one that I forgot to go over. But once again, clear out move. Very simple, just to put, this line there to give yourself some color as to where would be a good exhaustion point. So anyway, go back, check out the continuation side, the failed follow through, and then a couple other charts that have just been, heading straight up. Always good to just see charts because they get engraved in your brain. And then when you see them, you can react that much quicker. So that is it. Thanks, Chris, once again. And we'll catch you guys in the room on Tuesday. Once again, obviously, probably by watching it now, you've figured out that the market's not open today. So Have a great rest of your weekend, and we'll see you on Tuesday in the room.
Have a great week.